Where mortgage rates are headed in the next 6 months. I'm Dave Holland, licensed mortgage broker and real estate broker. I oversee 2 brokerages, 25 years in this business. My team handles loans in 36 states. So if you like what we're going through with you and it's a benefit, please subscribe. I definitely need friends. So I'm going to open with something that you probably don't want to hear. Nobody knows. Truthfully, anybody on here handing you a confident number right now is either guessing or trying to sell you something. So I'm not going to do that. What I'm going to show you are what people who actually move this market are saying in my industry, where they flat out disagree with each other, and what that means for you if you're trying to buy or refinance before the end of the year. So that last part matters, so stick around for it. Where we're at right now. So let's start with reality for a second. As I'm recording this, the 30-year fix is sitting somewhere in the mid 6s. Don't quote me on that. It's bouncing somewhere between 6, 6.5 all year. So it's dipped a little bit close to 6 back in the winter, drifted back up in the spring. Now it's just kind of sitting there depending on what the news says that particular day. That word sitting is the whole story for 2026 so far. Everybody keeps waiting for this big drop. It hasn't come yet. Now here comes where it gets interesting, because the experts have split into 2 camps and they do not agree. So camp 1 says that rates drift down or hold flat. Fannie Mae puts out in a forecast every month that the whole industry treats as a baseline. Their latest call essentially has the 30-year fix hanging around the 6.4 for the rest of the year, easing just a touch into the next year. The real estate trade groups are in the same neighborhood, low to mid 6s, somewhere in that realm. Maybe a small dip, but nothing dramatic. So that's camp 1. Roughly where we are, give or take a couple of tenths for a while. But watch what happened underneath that number. Back in the spring, Fannie Mae was calling for rates in the 5s by the end of the year. The 5s. We all thought the same thing. Yay! Then they walked it back up. And when you ask them why, the answer tells you something about how fragile these predictions are. So for 2 reasons. The war with Iran pushed energy prices up. Then it was off. Then it was on. Then it was off. And that keeps inflation hot. And the jobs reports kept coming in strong, amazingly. And that strong economy pushes rates up, not down. It's kind of backwards, I know. So the forecast didn't move because somebody got smarter. It moved because the world changed. So keep that in your back pocket, because that's the reason I opened the video the way that I did. So camp 2 says rates might actually go up, either stay the same or go up. So here's the camp that's not getting enough airtime. The Mortgage Bankers Association, which represents the actual lenders, has been running a little bit higher than everybody else. They've got the 30-year coming in close to 6.5 and holding there for the next year after, somewhere in that category. So, and then there's the Fed. The Fed met in June, held their rate steady. Some like what they said, some didn't. That was expected. But they also put out their projections, and those projections kind of flipped. So the median policymaker now expects rates to end this year higher than where they are today. A few months back, that same group was leaning towards a cut. So now they're leaning towards a hike, or at least staying the same. Read that again, because it's the single most unreported thing in the mortgage world right now. The people setting up monetary policy quietly shifted from we might cut to, oh, we might raise. The quick thing that people get wrong all the time, because we get the phone calls. So the Fed does not set your mortgage interest rate. The 30-year fix tracks the 10-year way more than it tracks the Fed rate. That's why you'll sometimes see the Fed cut and mortgage rates will go up the same day. You'll call your mortgage broker and they'll say, no, the rates actually went up. Everybody loses their mind. So when you hear the Fed is going to cut, rates are going to drop, pump the brakes, but not necessarily. Bond market may have already priced that in weeks ago. The 10-year is the number to watch. That's what you want. And it's been hanging around that 4.5 realm. Today it went up a little bit. So that's what you want to keep an eye out for. What do you do with all of this information if you're a real person and you're just trying to make a decision of what do I do? What's the right move? So first thing is stop waiting for a number. If you've been sitting on the sidelines telling yourself that you're going to buy when rates hit 5.5, understand that not one major forecaster sees us below somewhere in the 6s until 2027, 2028 at the earliest. You could be waiting for 2 or 3 years, renting that whole time, while mortgage prices keep climbing another 2 or 3% each year and eating up whatever you think that you would have saved as far as the interest rate. So the second thing is if the payment works at today's rate, the deal works. So I tell my clients every week, if the rates drop later, you refinance, and it's a bonus. If they don't, you already own the home and you're getting equity and you're saving on taxes for your interest rate. Either way, you're winning as long as you didn't overextend in order to get in, okay? And that's a very important piece. So the third thing is that if you can afford it now, waiting is a bet. You're essentially betting that interest rates fall more than home prices rise. Sometimes that bet pays off. More often than not so much. So right now, the Fed is leaning hawkish and inflation is sticky. That's not the bet that I would want to own my money on, but it's your call. And anybody who tells you that they know for sure is lying to you, okay? So the bottom line, 6 months out, the honest answer is rates are probably going to stay where they are, low to mid sixes. You can do buy downs, you can do temporary buy downs, other things to kind of offset that with a real chance that they go up before they come down. So the dream of something with a 5 in front of it this year, probably not so much. The people who forecast this for a living stopped believing that months ago. So quit timing it, run your actual numbers on an actual house that you want to go see. If it works, cool. If it doesn't, cool. Worst case scenario, we can take a look at it for you. You get on a call with me. We'll look at your real situation, the real numbers, what would make sense for you, and you make a friend in the mortgage business, and we'll take it from there. So the link is in the description. Subscribe if you like this information and believe it was valuable, and we'll see you next time.